Let's turn our attention now to the FMCG space. Dabur, they report an inline set of numbers. Britannia and Titan, well, they are due to report their numbers as well later today. How is Q4 looking for the FMCG space and what to expect? Well, Amnish Aggarwal, the head of research at Prabhudas Lilladher, joins us on the show. Hi, Amnish. Thanks a lot for joining in. Well, first on Dabur, what do you make of the numbers? The management sounded quite confident with regard to the outlook going ahead. What's your take?
See, Dabur's volume growth has been superior than most of the other players. And particularly for them, I think some of the categories, they are doing well. But however, I think if you look at, say, health supplements or hair oils, 2 or 3 big categories for them, which roughly would be, say, around 30 to 35, 40% of sales. So they are still under some sort of stress because of the high base in COVID and things like that. But overall, I think the outlook remains reasonably good. And given the fact that there is a scope to increase margins also and close to double-digit top-line growth, over the next couple of years, I think Dabur is a company which we are estimating a PAT growth of around 12.5% CAGR.
We spoke with Mohit yesterday from Dabur, Amnish, hi, morning.
Morning.
They said that rural, after 3 years, rural markets for them are doing much better than urban. They said urban will continue to be challenged. Rural is where the tailwind really is. That's not something we're hearing from everybody else. So it's kind of it stands out. Or does it, Amnish? And how do you read it?
In the last quarter also, I think Dabur's rural growth rate was quite good relative to most of the other players. Because in many of the products Dabur operates in, they are still operating in many of these, I would say, niche categories. And my sense has always been that there is not, you see, there is a demand issue, that it is not growing at a very fast pace. But the situation is not that it is tanking or the things are bad. Particularly, I think in the last 2-3 quarters, things have been gradually moving up. All across, and in companies where they have been able to manage the competition from regional player and unorganized players well, there you will see the volume growth crawling back much faster. So I think Dabur will definitely fall into this category, because for them, the categories which are growing, I think they are facing relatively limited competition in comparison to others. And in some of the categories, for example, oral care, they have grown by 22%. Which is, I think, which will be the best number in the industry. You look at Colgate, you look at Liver or any other player. In some categories, they are definitely gaining market share. So, and the salience of Dabur to rural has always been relatively higher, and that too more in the northern and central parts of the country. So, and these are large states, so that actually gives a very good indication for the coming years as well.
The other stock is Titan, right? It comes out with its numbers today. And we all know that the jewelry business for Titan has been so strong. It's already gone up about 18% in the quarter gone by. Gold prices are at a record high. Are you bullish on this one? And what's your expectation?
You see, Titans, I think the sales numbers are already known. I think the margins, they don't have much scope to surprise. More so, I think one should look out for what happens on the watches as well as eyewear, because these two businesses have not been doing that great in terms of profitability. But I think going forward incrementally, the next couple of quarters will be key to watch out for, because the gold prices have perhaps seen the steepest jump in the last couple of months relative to what has been happening, you can say, otherwise in the past few years. That is one. Secondly, we will have very tepid wedding season in run-up to, say, till October at least. So I think in the longer term, the company continues to look good. However, I think the stock is at 64, I think, times odd, on maybe close to 60 times on our valuations. It looks a good stock in the longer term, but I think any steep return, at least in the maybe say in the next 1 or 2 quarters, that doesn't look likely. In the long term, it continues to look very good.
Okay. All right. We will let you go on that note. Amnish, thanks a lot for joining in. Appreciate your thoughts here on CNBC TV 18. By the way,